Okay, let's unpack this. In just a few hours, we're expecting a pretty monumental financial event,
Mm-hmm.
a significant interest rate decision from the Fed. We're talking a potential cut of 25, maybe even 50 basis points.
A quarter to 0.5%, yeah. That can really send ripples, can it?
Absolutely.
Yeah.
But for you, listening right now, for your portfolio, for the broader market,
Hmm.
what does that really mean? It feels like one of those moments.
It really does. And what's particularly striking, I think, is the economic backdrop. It's unusual.
How so?
Well, the U.S. economy, by a lot of measures, is actually remarkably strong. We're seeing GDP growth, 3.4% to 4%? That's robust.
Yeah, it really is.
So for the Fed to be thinking about cutting rates into that kind of strength, some experts are calling it very strange.
Right. It kind of goes against the usual playbook.
Exactly. And that context makes understanding the market's potential reactions so crucial. It forces us to look a bit deeper, you know?
Definitely. So our mission for this deep dive is to sift through the sources you sent over some great stuff in there, including analysis from the Micah Stocks YouTube channel
Mm-hmm. Good, Chow.
to understand the immediate market reactions happening right now. And maybe more importantly, we want to uncover the, well, bold predictions from market expert Tom Lee at Fundstrat.
He's definitely got a strong view on this.
Yeah, we want to help you understand not just what might happen, but the why behind it and which specific areas might see what he's calling these monster moves. So let's first zoom in on the immediate market signals. Because honestly, there are some intriguing divergences right before this announcement.
Okay.
Here's where things stood as markets closed just before the expected decision. All the major indexes closed negative.
Right, saw that. NASDAQ down 0.08%, Russell 0.09%.
S&P down 0.13%, Dow Jones dipped 0.27%.
Yeah.
So, a bit of a cautious step back overall.
But not uniform, right? We're in some sectors up.
Exactly. That's the interesting part. Energy and consumer discretionary sectors actually strengthened. Suggests maybe some targeted optimism there.
Could be. While utilities were down 0.8%, real estate down 0.6%. Kind of what you'd expect, maybe.
Maybe. And the VIX, the volatility index, only registered at 16.3. That seems surprisingly low given the pressure. Didn't even cross 17.
Huh. That is low. Suggests maybe less fear than you'd think.
Perhaps. Elsewhere, the U.S. dollar weakened to 96.6. Oil was at 64.2. Bonds also weakened.
All kind of pointing towards anticipation of that rate cut, wouldn't you say? Weak dollar, weaker bonds.
Seems like it. But then you have crypto. Bitcoin reached 116,000, almost 117,000.
Wow. And Ethereum near 4,000. So strengths there.
Major strength.
So the crucial question then is, what does this mix tell us about investor sentiment right now, just before the decision hits?
Yeah.
Are we seeing cautious positioning, people de-risking, or is it more like confident speculation, especially in those growth areas?